What he's now doing, he just announced that if you want to pay extra, you can get those posts a little bit sooner than everybody else. What is the purpose of that? Why would you need a post 10 or 20 seconds before everybody else gets to see it? I'm not really sure the time lag, but it's something very small. Who would care? The only person who would care is a trader who's got like a program, an algorithm, where he can program Trump's Truth Social account directly into the algorithm to immediately trade based on those posts. So Donald Trump is saying, if you want basically what amounts to insider information, market moving information, I'll share it with you early if you pay me money. He's basically selling access to this information so you can trade off of it before anybody else gets it. How is there not outrage over what Trump is doing? Because it's actually an admission too that his posts can move the market, because that's the only added value. I mean, why else would you pay? Oh, these posts are so important, I need to pay extra to get them 10 seconds earlier or 20 seconds earlier. Who cares? Except if you get them 10 or 20 seconds earlier, you can position yourself in the markets before everybody else. By wrapping up some of the action in the markets this week, I speculated in prior podcasts recently that the air may be coming out of the AI bubble. And we certainly got some more indication this week that that was in fact the case, because the major stock markets all finished the week lower, led lower by AI-related names. They were some of the biggest losers. In fact, SpaceX, a stock that I talked about quite a bit on the last couple of podcasts, was one of the biggest losers. It was down about 5.5% today. And on the week now, SpaceX dropped 13.25%. It closed just below 124. The IPO price was 135. So even if you bought the IPO, you're down 6.7% if you didn't flip it, which obviously some people did, but pretty much everybody is now down. And in fact, if you bought the high, because 2 or 3 days after the 135 IPO, SpaceX actually topped 225. If you bought that price, you're down 45% if you still hold your shares. And to me, again, this is indicative that the speculative froth is coming off the market, that people don't want to keep gambling on SpaceX. And I talked at length about the crazy valuation, not just the $1 trillion plus market cap or whatever it was, 2-3 trillion, but the fact that it was trading at more than 100 times revenues and losing money. And people are now getting nervous. And I pointed out that this is all happening with a tiny float. The float now is about 5% after the green shoe got exercised by the underwriters based on the initial demand for the stock. So that enabled the green shoe, where the underwriters can oversell it and then get extra stock to cover their shorts. So you have about 5% of the total company tradable. Elon Musk owns better than 40% personally, and his shares are locked up, I think, well into 2027. So his shares are not in the market. But between now and the end of the year, a lot of other employee-owned early investor shares become free trading. So between now and the end of this year, which is not that very long, we're going to go from a 5% of the shares available to be sold to 40%, an 8-fold increase in the supply of stock. That is a lot of overhang. A lot of people are already shorting SpaceX right now. Short interest is exploding. Now, I think that a lot of the shorts could be the people that own these shares that are currently locked up. What they may be doing is just shorting the stock now, and they'll cover when their shares are free trading. So they don't have any risk. If the stock goes up, well, they just get the current price, which they're happy to get because they got their shares, for nothing. If they're employees, they just got issued stock. But it shows you a lot of people don't have the confidence to wait out the lockdown or lockup. They're selling now. They don't want to take their chances on where the stock price might be. So the sentiment is turning. Because remember, a lot of the hype that was built into SpaceX was AI. XAI and all that. And so you're starting to see this across the board in that sector. I talked at length about it in my last podcast, so I'm not going to repeat it again a couple days later. So if you didn't watch the podcast I did earlier this week, go check that one out. And I went over all of the CapEx and the spending of these hyperscalers and why it's really unsustainable and the potential collapse that's coming. But just to look at the overall market, the Dow was down about 1.2% on the week, closed at 52,146, and the S&P down a little bit more because of the tech exposure, down 1.35%. Biggest loser on the week was the NASDAQ, down 2.2%, and the Russell 2000 only down 0.35%. So it held up the best of the major averages. You know, one of the stocks too that blew up today was Netflix, and it was down maybe about 7.5% on the day, something like that. But on the lows, it was down over 11%. Its earnings disappointed. Obviously, Americans are strapped, right? They can't afford to pay all the rising costs of all these streaming services. So Netflix was down about 8% on the week. So pretty much all the decline happening today. But Netflix is down 45% from its high too, just like SpaceX. It's just SpaceX got there a lot faster than Netflix. But you know, Netflix was a high-flying momentum stock, and you know the momentum is gone. And you know there's a lot of air beneath that stock price too. But gold, silver also down on the week. Gold down 1%. Gold spent a couple of days trading below 4,000, but it didn't close the week below 4,000. We closed at $4,017.30. It finished out the week with just over a $40 gain today. Silver fared much worse, down 4% on the week. Silver closed at $55.83, I believe. This is about the lowest weekly close I've seen in a while for silver. And the mining stocks did even worse, or about the same as silver. The GDX was down 3.9%, and the GDXJ down almost 5%, 4.8%. Once again, the markets have got this wrong. The markets are reacting to rising bond yields, to the Fed, and I'm going to go over part 2 of the Warsh testimony a little bit later in this podcast. But it's the idea that he's now this hawk that's going to be tough on inflation, but also it was the real escalation of the war. You know, the war really came back in focus this week, especially in oil prices. Oil prices closed up about 11.5% on the week, closed at around $82.50. We're now up 22% so far in July for oil prices. Remember, we were down 30% in June. We're already up 22% in July. So that also pushed down gold because, again, traders are assuming that war is bad for gold. Just because gold is lower now than it was when the war started, that's the new narrative, that war is bad for gold. No, it's not. It's always been good for gold. It always will be good for gold. The only reason that gold went down when this war started was because it went up so much before the war started. And part of that was due to the anticipation of the war. So this is a massive head fake that is creating an excellent opportunity for people who missed out on a huge rally to be buying both the metals and the miners. And yes, silver is way off its high of $1.25-ish, down to $55.83. But what I focus on is the fact that we're above 50. We had a massive breakout. You know, there was tremendous overhead resistance just under 50, going back to 1980, and then again in 2011. So the silver chart looks phenomenal, and I think in a couple of years you'll barely notice the drop from 125 down to 55 where we are now. So it is a great opportunity to be buying. Bond yields did ease a bit.